There is a powerful current running through the global energy market right now. And let me tell you, it is glowing hot. We are talking about uranium, the fuel for nuclear power. It's seeing a price surge we haven't seen in nearly 2 decades. And today, we're going to break down exactly why.
So let's just jump right in with the headline number. The long-term price for a pound of U₃O₈ just hit $87. To put that into perspective, that is a 17-year peak. Now, this isn't just some minor blip on the charts. This is a massive signal that something really significant is happening in the energy world.
So we are going to get into the story behind these numbers. What in the world is driving this surge? Who's feeling the squeeze? And what does this all mean for the future of nuclear energy? Let's dive in. Okay, to really understand what's going on, we need to look at a few key market indicators. And right now, they're all pointing in the exact same direction, straight up.
What's really interesting here is how these different numbers kind of reveal the market's whole mindset. I mean, look at that $87 long-term price. That shows that buyers are so confident they're locking in these high prices for years to come. But the spot price, the price for immediate delivery, tells an even crazier story. The market is incredibly tight right now, and that midterm price, it just solidifies this powerful upward trend.
And hey, just so we're all on the same page, when we say U₃O₈, we're talking about tri-uranium oxide. It's the raw, stable powder that mining companies sell. You've probably heard of it by its much more famous nickname, yellow cake. This is the stuff we're talking about.
So, what is causing all this? Well, it really comes down to a fundamental imbalance. Let's start with the demand side of the equation. All the forces that are pulling these prices higher and higher.
Okay, so we're seeing 3 huge things happening all at once. First, more nuclear reactors are coming online globally, and they are hungry for fuel. Second, utilities are getting smart and stockpiling, buying up uranium now to protect themselves against future price hikes. And third, you have buyers locking in these high prices with long-term contracts, which just screams confidence in where the market is headed. Now for the other side of this coin. While demand is absolutely surging, actually getting uranium to the market is becoming a real challenge. This is what we call the supply squeeze.
And this right here illustrates the whole problem perfectly. On one side, you've got these incredibly powerful demand drivers pushing prices up, and on the other side, you've got these major constraints on supply pushing right back, making the whole situation even tighter. It's a classic squeeze.
Let's look a little closer at these constraints, because this is where it gets really dicey. First off, there's just very little extra supply you can buy on the spot market. It's just not there. Second, we're seeing real production bottlenecks. You see, turning yellow cake into UF6, that's the gas you need for a reactor, is a crucial step, and some key facilities are facing challenges. And to top it all off, geopolitical risks in major African mining regions could disrupt the entire supply chain right at the source. So what happens when sky-high demand meets an incredibly tight supply? Well, prices go through the roof, but the effects ripple through the entire nuclear fuel cycle. So the question becomes, who wins and who pays? And look, this pressure isn't just on the raw yellow cake. This chart here shows prices for conversion, which is the next step in the process. The spot price is way higher than the long-term price. That is a huge premium, and it proves that this scarcity is being felt all the way down the supply chain.
So this creates a pretty clear economic chain reaction. You get higher prices for the raw U₃O₈ and for the conversion services, which leads directly to higher overall cost to actually make the fuel. And who benefits from this whole situation? The integrated mining companies, the ones that have exposure to multiple steps in this process. They're not just selling the raw material, they're benefiting from these higher prices all the way down the line.
And this is exactly why investors are focusing so hard on these key players. You've got the big integrated miners, the active producers, and even the juniors. Now, these are the smaller exploration companies out there searching for the next big uranium discovery. And in a market like this one, they're suddenly looking very, very attractive.
So where does all this go from here? This price surge has set the stage for a really interesting year ahead. Let's look at the key signals you should be watching for.
Here's a simple roadmap for you. We just saw that 17-year high. The next crucial piece of data will be the upcoming market updates. Those reports will tell us if this momentum is carrying over, and if it is, a lot of analysts see the potential for even more price gains this year.
This quote really hits the nail on the head. These high prices, especially those strong long-term prices, create a massive incentive. It suddenly makes it really attractive, economically, for those junior exploration companies to go out and find new uranium deposits, whether that's in Niger or the DRC. This is basically the market's way of trying to solve its own supply problem.
Which brings us to our final big question. We know that new reactor builds are driving demand, but will these sustained high fuel prices change that calculation? Or could the global push for clean energy be so strong that countries decide to just accelerate their nuclear plans anyway, adding even more fuel to this already raging fire? That is the big question hanging over the market as this new year gets underway.